You sourced them in from the commercial side, and then all of a sudden said, maybe I'm on the wrong end of this deal.
So yeah, I'm a previous banker at JP Morgan Chase, and we started a mortgage company that was working primarily with investors, and working with a variety of different lenders for investment loans, rehabs and then cash out refis and stuff like
Right.
that. But yeah, I mean, I did commercial loans. I've did that for years before I got into the note buying space because I was like, I saw the opportunity.
Yeah. I bring that up because you're specifically keyed into how the banks think, how the banks are actually evaluating their portfolios, and when they're going to start sloughing things off, right?
Mm-hmm. And that's usually the first tick on hey, a bank is in trouble.
Yeah.
Banks have to file quarterly reports with the FDIC. There's a company that we use called Bauer Financial that all I got to do is call them up once a quarter, say, hey, send me the most recent report on banks that have 5 or more branches, what we kind of track, right? Those are the ones that are going to be, and it'll tell us how much in default they have, residential, commercial, what percentage of their portfolio is underwater, how much is coming down the pipelines. It's already 30 to 89 days late. And the thing to look at when you start seeing increase in this distress is looking at a bank's reserves.
Right.
Because a bank has to put so much money aside for every non-performing loan. So it takes money out of the coffer that they're allowed to lend on. And we all know banks leverage, every dollar comes in 15 to 50 times.
Right.
So if they have to put away money to offset a bad loan, it reduces profitability. It also reduces the ability to lend and make new loans and make money on stuff like that. So when you start seeing a bank reserves start going up, that tells you that, A, they're getting more distressed debt. And the more they get to the point where they're at an 8 to 10% default rate, they look to move that stuff off their book.